Hey everyone, welcome to today's live stream in Sterling Stock Picker. Today is Monday, March 27th. Hope you're doing great. You know, it's always exciting being an investor, isn't it? There's just like things happening left and right, front and center, and that's one of the most beautiful things about being an investor. It's a constantly shifting and changing landscape. Have you noticed? Like, you can't even make this stuff up. I'm telling you. All right, let's dive into today's call here. Let me share my screen. We've got the markets not doing anything big. Dow up 243 points, less than 1%. The NASDAQ was up earlier today. It turned slightly down, down 42 points. S&P 500 pretty much flat. I mean, there's just really no major moves except for crude oil. Look at crude, up 4.39% today. So you're going to see rising gas prices for certain. They're coming our way. Gold down last week. It hit, did you see it? Hit the 2,000 mark, $2,000 an ounce. So now it's pulling back today because the narrative has shifted, right? We've got to keep up with the narrative because it's ever changing. And then they can say, you know, oh, things are fine. Banking system is secure. So now we're going to bring down the price of gold. Unbelievable. Hey, buy the dips, right? Silver the same. Silver had a good move last week as well, sitting at 23.13 an ounce. 10-year bond, look at that, up 4.11%. So as rates, you know, because the narrative has shifted to everything's fine with the banking system now, the Fed is going full on with their agenda of continuing to raise rates. U.S. Federal Reserve raised them last Wednesday 25 basis points. So it's interesting because that was a sort of riding the line of what's acceptable and what's not. It was just middle of the road, nothing major, but they continue to rise. They're certainly not backing off their agenda of higher rates. So continue to expect higher rates. You know, as you look at your financial picture, that means do your very best to pay as much debt down as you can. Certainly credit cards, if you have any uncollateralized debt, you know, retail cards, gasoline card, just get those to zero. That's going to be the best use of your dollars right now, getting those cards paid down. NASDAQ up slightly, nothing major, and then the Australian market up a very small amount. So the markets, I don't see any definitive move here either way. I see a lot of gibberish talk in the news about earnings coming out this week. We'll talk about that in a moment. And then the banking system is front and center with the news, that's for sure. Let's see. There it is. Markets rise after opening bell as regional bank stocks rally. So here it was doom and gloom last week, right? From the different banks that are struggling, and now it's like, yay, hey, no worries, it's fine, everything's fine, nothing to worry about. But is everything fine? I'm not certain about that in the banking sector. U.S. banking crisis definitely brings us closer to a recession, top official Fed warned. So they talk out of both sides of their mouth because at one instance they're saying everything's fine, banks are secure, you know, Joe Biden, banks are secure, your money's safe. They're doing their best to comfort people because they don't want a bank run. They don't want people pulling all of their money out. That's what they're saying caused the big problem, the implosion over at Silicon Bank, when we know it wasn't. It was clearly their bond portfolio. And when clients move some money around and they're wanting, the bank has to then free up funds because the bank doesn't have a bunch of money sitting around. They certainly don't have, you know, money is no longer backed by anything other than the full faith and credit of the U.S. government, which is laughable at this point. But when it was removed by in Nixon's era, from gold, being backed by gold in the 70s, it's just been like a crazy printing scam ever since. So we have to watch this closely. We have to watch, where things are going, because they're shifting so fast. And as an investor, we can certainly make a lot of money in this type of environment. Here's some stocks that are mentioned last week. Analyst buy ratings with price targets and VITA. And then we've got some futures edge up as bank concerns ebb, right? Bank concerns going away. So I want to talk a little bit about, right here, these are the earnings coming up, what you can expect to see this week. The World's Bank's future rests on its next leader. The World Bank's future. So everything is globalized, right? Every type of article that you're seeing, everything talking about the financial situation happening. It's quite interesting to see this roll out in the way that it is and being presented to us. Pinterest stock up. Great. Carnival says bookings at record levels, but higher fuel prices ding outlook. Those darn fuel prices. The Fed doesn't have to lose the inflation battle to win the bank war. That's an interesting article. I'm going to recommend you read that. Roku stock rises after an upgrade. Why there's opportunity for the shares. Take a look at that article. That's an interesting one too. I'm going to talk about Roku in a moment. So we've got Lululemon earnings coming out shortly. Where are the Intel, Carnival, Micron, Walgreens? There's just a lot going on this week with earnings coming out. So just keep aware of that, because we're seeing how much it's affecting the price of stocks that trade. So just be mindful of, when your earnings, companies that you own are going to post earnings. I want to talk about this bank stock here. First Citizens Bank shares. Interesting. Look at that's not what I want to do here. Look at the rise of the stock today. Let me shrink the screen down a little bit. Look at this, y'all. It's up $300 a share, 51%. 51%. Who is First Citizens Bank? What do they do? What did they do? Well, they got a $16.5 billion discount for taking over Silicon Valley Bank. That's what happened there. Huge discount, because the Federal Reserve went in and what's called mark to market the balance sheet of the bank, meaning they have to say, okay, doesn't matter what you paid for these investments, bonds, doesn't matter what you paid for these bonds, we're gonna mark them to market in today's dollars. Remember, the Fed has now raised interest rates 9 times. As rates go up, I've talked about this ad nauseum so many times, values drop. So the Fed came in and said, yeah, we've raised rates 9. Now we got to make sure, we got to see what the value of your portfolio is. So that was brought into the deal, and sure enough, First Citizens got a $16.5 billion discount. Unbelievable. And when we look at this company, look at what the stock did today. Look at that bounce. It went from 500 to over 800. Look, $882 a share. So then we have to ask ourselves, well, who's the owner of this bank? Who's the largest shareholder, right? Because really, I mean, come on. What kind of deal is that? Like, that's just too good to be true almost. So we scroll down. Sorry, I hope I'm not making you dizzy here. And we go to holders, this tab here, click it. And we see that 21% are held by insiders, 68.86% held by institutions. But institutions hold 87% of the shares in float. Institutions. So who are these institutions that own this stock? Wow, look at that. What a surprise. BlackRock owns almost 12% of these shares outstanding. See that? 11.95%. So it's BlackRock, it's Vanguard, some of the usual suspects, State Street, these big corporations. So then we got to look at, well, what mutual funds is this stock in? Well, the BlackRock Equity Dividend Fund holds 3.14%, or 423,000 shares. See that right there? $246 million value. But we don't see any other BlackRock fund as a top holder. Isn't that interesting? So this fund accounts for 423,000 shares. But hold on, wait a second. BlackRock owns 1,610,000 shares. See that? 1,610,000. So there's only 423,000 here. What happened to those other 1,200,000 shares? Oh, that's right. They're just on their balance sheet. So can you see what's happened here? BlackRock is getting extremely rich from this deal right here today in real time. Their asset is up 51%. They own 1.6 million shares. Got to follow the money, right? That's what they say, follow the money. So don't run out and buy this bank stock. In fact, don't run out and buy any bank stocks. I don't care if the regional bank stocks have rallied and they're up today. There is serious cause for concern with this banking sector. It's beyond what happened in 2007. It's beyond. I mean, they have to factor in. So that was one bank where they marked to market their asset base. So what is an asset? Well, a lot of banks hold commercial real estate mortgages. That's considered an asset for the bank, not so much for the investor, right? Because the idea is that the loan was to be paid back. So it's on the bank's balance sheet as an asset. Well, if there's an issue with repayment of these loans, commercial real estate loans are very short-term adjustable rate loans. They're 3 to 5 years. They're not like a residential loan where you can lock in a rate for 20 or 25 or 30 years. So in the next probably 12 to 24 months, I would think the lion's share of these commercial loans are going to be marked to market on balance sheets of banks. And these are regional banks. These are community banks, right? A lot of community banks lend to investors in the community in which they reside. So when there's a mark to market and they have to look at, okay, you've got a commercial loan sitting at 3% or let's say 3 to 5% right now. Come renewal time, it's going to jump from 7 to 9%. How is that going to impact the loan, the holder of that note in order to repay it? It's massive. It's a massive jump in terms of the monthly interest rate and the monthly payment. So this has just begun, this whole play out of this banking situation. There's no, just because they say everything's fine, don't worry. Of course they're saying everything's fine because they don't want you pulling the money out of their bank, their institution. Because these banks are heavily leveraged. For every dollar in they get, they loan $8 or $9 out in CDs and mortgages and all these other assets that are out there on the bank's balance sheet. But they don't want you taking your money out. So I just want to bring some rational conversation around this so we can, you can best navigate it as an investor. Look at your portfolio, see what banks are in there. I'd say look at what's on their balance sheet. Banks should have to post there as much as they want to know, what's on your balance sheet. What are your assets if you're wanting money from them? Well, as an investor, let's see what's on their balance sheet. So what you'll want to do is go to the bank's website, and every single company, and you can do it under company description, every single company, bank, every company that publicly trades has a website and an investor section in the website. So all you do, here's First Citizens Bank, you'll scroll down and you'll go, most of them hide it in their footer. So you go to the footer. Whew, it's a long website, isn't it? They don't even have it in there. Oh, here we go. Footer, right there. Investor relations. See that? You're not seeing it on my, right there. Investor relations right at the bottom there. You click investor relations. And they give an overview, but this is what we're looking for. Q4 of 2022. Those are the earning releases, but what we want to see is, where's their 10K? Investor relations, please contact them if you are representing and need assistance with financial disclosures. I guess you could, I don't know why they don't have their 10K and 10Q here. Very odd. Most companies do. Let's see if it's view all events, if there's anything there. No. At any rate, what a 10K and 10Q does is it shows you what the bank is. Oh, here we go. News, investor email, SEC filings. Okay, so you have to enter your email address to get. If you were a shareholder, you could enter your email and receive SEC filings. So every company has to file their 10K, 10Q. Q is their quarterly filings with the SEC that basically says, what's on their balance sheet, what their focus is for the upcoming quarter. The K stands for annual. That's their annual filings. I like to look at quarterly just because I like to keep up with what my companies are doing that I own shares of. So that's one way to find it. Okay, check that out. Any bank if you hold any in your portfolio. And the stock that I'm going to, dare I say, stock of the week. I don't know. I just said it. Roku. Roku is my pick for the week. Up today, 4.2833%, 4-star rated, above average risk. I like it. It's not quite above the 200 moving, but look how close it is. $2 away. The price of the stock sitting on the EMA 15, above the SMA 50, above the SMA 15. So we're starting to see a nice turnaround here. And look at the MFI sitting at 34.37. So our recommendation is buy it at between $60.69 and $61.94. I'm in agreement with that. Take a look and see. Maybe you'll put an open order in or whatever if that speaks to you. A lot more buyers than sellers. Here we go. 2/3 buying the stock, 1/3 selling. I've always said insiders are not the best buyers, but they're almost perfect sellers with their company stock. So only 1/3 is selling. And because, and there's a caveat with the selling of insiders with their company stock because so many executives are paid in company stock, right? Their pay is tied to performance, and I'm a huge believer in that. And so that could just be someone, freeing up cash because they have a lot of stock because that's how they got paid. So anyway, that's my pick for the week. I hope that this is helpful to you. Please leave any questions in the comment section if you'd like me to answer them. I'm happy to do that. Thank you for all your support, for recommending us to your friends and family. We greatly appreciate it. And we start our next Money Mentor program in 2 weeks from this Wednesday. So is that April 12th, I believe. If you know someone who might be interested, just please reach out to us. We'd love to be their money mentor. You know, it's part of the Sterling Stock Picker now, the online course and the Money Mentor program. So anyone who joins, if you're a shareholder of ours, it's going to benefit you and benefit our earnings. So yeah, we're excited about that. Excited to keep moving forward. We've got a lot in the pipeline that we're working on, and we'll share with you shortly. Look for a couple emails coming out from us for updates. Have a great week. Thanks, everyone.